Gold and silver prices are running higher this week on headlines of Sell America, which sounds a little strange and actually kind of bad, but maybe it's not. Okay, so we've all heard about gold prices reacting to fear. Global tensions tend to push the price of gold up, and we saw it almost immediately following the Ukraine invasion, for instance. Banking crisis in 2023, that would be another one. When regional banks started failing, it was the same story. The price of gold spiked, shot up to new highs. And then the COVID panic, 2020, same story again. It's not an idea, it's what actually happens. Now this week, we saw some temporary turmoil when Trump resumed talk of buying Greenland, tariffs for anyone standing in the way, and we saw it happen again. Price of gold shot up, silver followed, but this time, it wasn't just fear or turmoil pushing the metals higher. This time, it's actually about something bigger. But first, let's get a quick shout out to channel sponsor Summit Metals. If you're looking for gold and silver, they've got you covered. If you're looking to sell your gold or silver, they can help you there too. SummitMetals.com. Now, we've all seen Sell America by now. It seems to be in all the headlines, but we need to be really clear what's actually being sold. It's not just a stock market pullback. We saw a broad sell-off of U.S. stocks, U.S. Treasuries, and the U.S. dollar, all at the same time. And again, gold did not fall, but the dollar had its biggest drop since April. Treasury prices fell, which means yields spiked and U.S. equities sold off hard. Now, that combination matters because it doesn't happen often. When stocks fall, bonds are supposed to do their thing. When fear increases, the dollar is supposed to strengthen. But none of that happened here. So what we saw happen with gold and silver prices was not about fear. It's a wide capital reassessment. Investors reduced their exposure to the U.S. itself, and they moved that exposure into gold and silver. So metals didn't need that traditional panic event to take off. They benefited just from reallocation. So it's a new thing. What made this move different wasn't that gold and silver went up. They go up all the time. What made this move different is that we actually saw an additional driver, something new. Capital reallocation. And you could say this has been building for a while. Talk of death of the dollar has been around for quite a while. Gold overtaking U.S. Treasuries and foreign reserves. That was big news, but even with all of that, when stocks sell off, bonds are supposed to step in. And when geopolitical risks pop up, treasuries are really supposed to catch a bid. Now, this time they did not. Bonds sold off right alongside stocks. Gold and silver, though, they moved on their own, and that's not a normal risk-off move. Now, this is interesting for a number of reasons, not the least of which is that gold is above $48.40 and silver is above $94 as I'm recording this, but the move also tells us that gold and to a certain extent silver is more than just some kind of safe haven asset to have in case something terrible happens. There was a time where you would say that gold and bonds fit together in a risk-off category, and they were both treated as safe havens. But now with U.S. Treasuries selling off, you have attention shifting more toward gold, and the gains in gold right now appear to be carrying over in silver as well. So I'm not just making a video to give you one more reason to buy gold or silver. Really what we're trying to do here is separate cycles from resets. And what we're seeing in the metals looks like a lot more than some kind of cyclical top. It looks like a structural change. So long story short, you have to consider that it could do a lot more than any kind of normal cyclical move. So let's get some new opinions in here. If we were to look at what the analysts are saying, I'm not the only one thinking that we appear to be outside a normal gold cycle. You have LBMA analysts saying they expect gold price to push above $5,000 this year. No surprise there, but Julia Du from ICBC Standard Bank says, hey, hold my beer. She sees gold going as high as $7,150. This is 2026, so that has to be a typo, right? No, she actually gave an average forecast of $6,050 for gold in 2026, with the range between $4,100 and $7,150. Now, that's a big range, but the top of that is also modeled on real cases. And the same analyst gave a range of $62 to $150 for silver. There's even a case for $160 silver here. Now, this is a long article. I will drop it in the sources in the description if you want to check it out on your own. But again, Cliff Note style, if you're expecting this to be some kind of cycle top, these analysts are saying there's a long way yet to go. Now, Sell America might seem like the headline of the hour. It might even seem fleeting, but the idea has been building and it doesn't look like it's going away. Trump has consistently advocated for a weaker dollar, saying it would boost American exports and it would improve corporate earnings. Now, this shouldn't be news. Trump says this all the time. Here's one example.
Now, it doesn't sound good, but you make a hell of a lot more money with a weaker dollar. Not a weak dollar, but a weaker dollar than you do with a strong dollar.
Now, a weaker dollar means higher prices for gold. We know that. And as long as policy and positioning continue to create pressure on U.S. assets, that cycle continues. And gold and silver will possibly continue to be one of the best options for risk-off capital. Now, look, I'm not saying gold and silver will only go up. I'm not saying there won't be volatility, but I am saying that the role gold plays has changed. Even looking back just a few years, gold is no longer a contrarian asset. It's hard to even call it alternative. It's a constant part of the news cycle, and its role is far more important today than it was even back in 2020. And as long as this dynamic of a weakening dollar continues, gold and silver benefit. So Sell America sounds like a bad thing. Some of the coverage on the topic definitely treats it that way, including a little bit of a how dare you tone, but the implications aren't all negative. And if you're looking for an asset class that holds up really through all of it, precious metals have been clear winners. Well, maybe it's a little too soon to start using year-to-date numbers, but gold is up 12% already year-to-date. Silver is up 27% year-to-date, and really, it's hard to think that that's going to change anytime soon. And let's call it good there. Let us know what you think about the US dollar sell-off. Is that a good thing? Is that a bad thing? We know what it's doing for gold and silver, but let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.